Hi guys and welcome. Research by TripNet shows that approximately 15% of Americans are age 65 or older, a total of over 46 million people. Over the next 40 years, that number is expected to reach 98 million for a total of approximately 24%. What this means for you, however, is that your car insurance rates are likely to start climbing. For those who are getting to those older years, knowing how to get the right rates is important. On this video, we will understand how does being a senior affect car insurance rates, when do you start paying more, and share some tips that will help you to get the cheapest auto insurance for seniors. Let's start. How does being a senior affect car insurance rates? According to government research, being over the age makes you far more likely to get into a fatal car accident. Non-fatal accidents are more prevalent among these age groups as well, and the most common reasons may be because of age-related vision problems or even age-related mobility problems. Either way, car insurance companies increase rates for elderly drivers. The reason? They're considered higher risk than drivers of a younger age. Overall, just about everything in the human body starts to decrease in effectiveness over time. That means your reflexes might start to slow down, your hearing or vision might start to deteriorate, and even more. All of these things can be extremely dangerous. More than that, if you're involved in an accident as a senior, you're more likely to suffer a serious injury as a result of the accident. Let's take a look at some factors that tend to go along with age, which can increase your insurance premiums. Decreased quality of hearing. Decreased quality of vision. Osteoarthritis and other physical health conditions. Decreased cognitive processing. Because your insurance company doesn't want to take on the risks associated with these conditions, they pass the fees on to senior drivers instead. When do you start paying more for auto insurance? In general, your car insurance rates are going to decrease from the time you're 16 and first get your license until you get to 60. They will generally decrease the most in the 30-year period before you reach 60. Once you hit that milestone, however, rates start to go back up again. The problem is that fees will increase, and even getting a basic level of coverage is going to get harder and harder for you. Even besides problems with vision and other conditions that might make driving harder, someone of a higher age is also more likely to suffer a health-related emergency while driving. If your car insurance company is more likely to spend more money on you, they're going to find a way to charge you more money. That's because they don't want to have to spend that money. Where you can get a little better off is by choosing a plan specifically geared for senior drivers. Get the cheapest auto insurance for seniors. We're going to take a look at some of the easiest ways that you can actually decrease the amount you spend on your insurance, even as a senior. Choose an inexpensive car. Getting a lower priced car is going to help you decrease the cost of your car insurance. That's because your insurance goes up the nicer and more expensive your vehicle is. That means it's not just about how new the vehicle is, but also who makes it. The specific model and even features can all have higher insurance costs. Your best options are minivans, crossovers, SUVs, and other moderately sized vehicles with high-quality safety features. Shop around. You never want to take the first offer when it comes to any large purchases. That's true when it comes to car insurance as well, and especially for seniors. Take a close look at several different quotes and see where you could be saving the most money. By shopping around, you're going to have the opportunity to see what different companies have. You can compare the plans they're offering, the rates available with those plans, and more. But you should make sure you're getting quotes based on your age bracket. If you don't, you could end up choosing a plan based on a rate that isn't even offered to you. Also, look at what you're actually comparing. Some insurance companies will show you slightly different plans and offerings to make it seem like they're showing a better rate. You want to compare apples with apples, at least as closely as you can. With insurance companies, you're generally not going to have exactly the same offering from each company. You can still get close. Comparison sites online are a great way to do this because you can see everything at once. You just have to put in your own information and they'll do the other work. Then you get to choose where you want to add a little or take away. You also get to check through each of the different settings to make the right choices. You can even talk to your insurance company about other offers that you've been given to see if they will match. Some companies might do so just to keep you. It's cheaper for them to keep a customer than to find a new one after all. Take a driving class. Driving classes are a great way to show that you're still an efficient and safe driver. By taking the class, you may be able to reduce your rate by as much as 5% of your premium. You get to choose between different types of programs depending on where you live. Some areas offer online programs. Others might be in-person classes. You may have to do some book learning or listen to lectures, or you might have to actually get out and drive. Find out about different classes that are available in your area and how they could affect your car insurance. They're generally inexpensive, and the savings you get from them could be quite high. Choose safe vehicles. We talked a little about choosing the right type of vehicle above. This also applies to choosing something safe. Safer vehicles are ones that aren't likely to get stolen. They're also less likely to need repairs. Some are also safer overall in car accidents. These things are going to help decrease your rates. Get a discount. If you don't drive a lot, you may not need to pay for as much coverage. For example, if you're retired and don't have to drive daily, why should you have to pay for the same coverage as someone who drives 100 miles a day? You could actually qualify for lower pricing because of driving less. The most important thing is to talk with your insurance company about how much you drive per year. Let them know when you stop driving as much. Also, find out what the cutoff is for low mileage. You may be able to get a significant discount. Some insurance companies even offer up to 10%. Some car insurance companies are offering option to pay for the miles that you drive as well. For these, you will pay more if you drive more during that month. Other months, you'll pay a lot less. This might not be good for those who drive a lot, but for those who have few months with extensive driving, it's a good way to go. Cut extra drivers. If someone in your home doesn't drive, you could actually cut them off the policy. Now, some states require anyone with a license to have insurance. Others don't. If your state doesn't require it, then drop anyone who doesn't drive, regardless of whether they have a license. This will help you save money because fewer people are actually being insured. Increase deductible. Deductibles are the amount of money you pay before your car insurance pays anything. If you're willing and able to come up with a little bit more money, you can increase the deductible. This will decrease your premium. That's because you're taking on a little more of the responsibility rather than the insurance. Protect your car. We're not just talking about the car insurance here. We're talking about making the car safe. Getting car alarms or adding other safety features is important. This will make your vehicle less likely to be stolen. From there, you can reduce your risk and the insurer's risk. They'll give you discounts for that. Should I stop driving? This one can be a little difficult for some, but it might be your best option. If you stop driving, you don't have to pay for car insurance at all. You can decide to just stop now and not worry about car insurance again. When it comes to making the decision to stop driving, there are several factors to consider. You have to consider how well you're driving. Are you having any close calls or near accidents? Are you getting dents and scratches on your vehicle? Do you find yourself getting lost or confused? Do you have trouble seeing traffic signals or other vehicles? If any of these sound like you, then you may want to stop driving entirely, even if you haven't noticed that there may be others in your life who have. They will be able to talk to you about the possibilities and whether you should stop driving. Talking with family, friends, and doctors can help you make the choice. Bottom line. In the end, there are plenty of ways that you can decrease your car insurance costs. Even as a senior or getting close to being a senior, you can save money. Take a look at each of these tips and then decide what to start with. You may even decide to give up your driver's license entirely. That's it for now. On our website, you can find more posts and podcasts, as well as calculators and other financial tools. Buy a new car? We would love to know your thoughts, so feel free to share them with us in the comments below. I hope you enjoyed it, and don't forget to subscribe to our channel to get the best financial videos for free.